Hi, everyone. I'm Ryan Dietrich with the Carson Group, and welcome to your quarterly market outlook. Albert Einstein once said, "Life is like riding a bike. You've got to keep moving forward to keep your balance." That is a lot like what we have seen so far this quarter and even last year. Let's just hit rewind for a second. Remember last year, stocks were in a bear market and bonds had a historically poor year as well. So it wasn't a good year for investments. That's the bad news. We've got to keep moving forward like Einstein told us. And here's the good news. The first quarter, the S&P 500 gained over 7%. Technology did even better. A lot of good gains happened. Bonds actually had a really solid quarter as well. What's even more impressive to us, in the middle of March, when we had the Silicon Valley Bank issues, which I'll talk about next, stock market sold off. But you know what also happened? Bonds did really well. Last year, when the stock market sold off, bonds didn't do very well. So that's a nice change. It's something that we did expect. So what was kind of the big headline so far this year? Besides the nice gains we've seen in stocks and bonds, it was Silicon Valley Bank going under, the 16th largest bank as of the end of last year. Within a couple days, was in FDIC receivership and out of business. Now, here's what we're seeing right now. We think that is really just an issue with Silicon Valley Bank. It hasn't spread to other areas of financials, to other areas of the banking industry. Believe me, this could cause, there still could be some more waves that could come. Maybe even potentially another bank could get in trouble. But as of now, it seems to be fairly contained, and we think that's a real positive thing. So you think about it, though, let's talk about the economy for a second here. The economy's been really strong again. Now, there's no question with what happened to Silicon Valley Bank, there's going to be tighter lending. Regional banks might not give as many loans to small businesses. So does that increase the odds of a recession this year? It does. But as we've said before, our base case is we still do not see a recession in 2023. And one of the main reasons the U.S. consumer, which makes up about 2/3 of the overall economy, is still really strong. We made over 1 million jobs in the first quarter just this year and nearly 5 million jobs last year. So you don't have recessions when employment is that strong. Now, trust me, manufacturing is weak. There's other parts of the economy. Housing has clearly been slow as rates have gone higher. But overall, we think we can avoid a recession. Now, the next step to all of this, inflation and the Fed. One of our big calls this year, we thought inflation was going to come back, and it really has come back. Now, trust me, headline inflation is still about 5%. That's more than any of us want, but it's not the 9% we were seeing, this time 7-8 months ago. We've definitely had inflation coming back down. And what does that mean to the Fed? Fed might have one more rate hike. They had historically high rate hikes or aggressive rate hikes last year. Might be one more rate hike in May with the Fed. Then they can take a look around and calm down, and markets can kind of work their way through as inflation is coming back down to earth, which is a really, really good thing. So let's kind of wrap things up here. So we had a really good first quarter. What do we see going forward? Well, the good news, we still think there's some good times coming. Here's a stat for you as I'm going to leave you. Well, the S&P 500 gains at least 5% in the first quarter. Again, just gained 7. The rest of the year, so the final 3 quarters, the S&P 500 has been higher 15 out of 16 times. The only time those last 3 quarters were lower was in 1987. So again, this momentum we have with an economy that continues to surprise with, actually historic, historic skepticism is out there. All these headlines, all this negativity, we get it, right? There are some very worrisome things out there. But a funny thing about that, once everyone's been worried and everyone is sold, any good news can really propel things higher. And that's what we've been seeing. And we think we can continue to see as we think stocks will continue to do quite well here the second half of the last 3 quarters of this year. Economy can likely avoid a recession, maybe a slowdown, but avoid a recession. And bonds should act as bonds. When we have volatility, they'll give you a little bit of that diversification that you were not seeing in your portfolios this time a year ago. So with all of that, we really appreciate the opportunity to talk this quarter and look forward to talking to you next quarter. Hopefully we have some more gains to talk about then. Take care.